6 years ago, I had less than $4,000 in the bank. What's up guys, welcome back to another video. In this video, I'm gonna be breaking down in 3 sections. I'm gonna be talking about the deal, the numbers, and the takeaways in my largest real estate investment deal yet. So you guys read the thumbnail and the title correctly. Yes, this is the largest deal that I put together, and also, fun fact, this was my first one that I put together. So this deal came about 2 years ago, and I am not a full-time real estate investor. I'm not an agent. My main bread and butter, as you would say, is in software development. So I run a company called Grand Apps, where we make mobile apps and websites. Been doing that for about 7 years, and during that time, I've been saving up money so I could invest it in a deal like this. All right, so to start, you guys need to know the deal structure. You need to know the numbers behind it. So we purchased a mixed-use 5-unit building. We have 2 commercial spots in the bottom, we have 3 apartments on top, and we got that at a purchase price for $250,000. Now the location is in Grand Rapids, Michigan, in West Michigan. That's where I currently live right now. We also got the land contract to negotiate a 10-year balloon. We only put 10% down. We got a 6% interest rate, and it was amortized over 30 years. To put that into context, a traditional commercial loan, you have to have, instead of a 10-year balloon, you have to have a 5-year balloon, meaning you have to pay the rest of the money or refinance in 5 years. We doubled that. Also, if you get a commercial loan, usually you have to put about 20% down. With our land contract, we only put 10% down. And the last thing to think about, comparison versus comparison, is if you do a commercial loan, usually you have to have 20-year amortization. We got 30-year amortization, so 10 years extended for the period of the loan to finance that over time to drop our monthly cost. I'm sitting there at the closing table, we sign everything, they slide me an envelope. I am now the proud owner of a 5-unit mixed commercial and apartment building. Now it's time to get to work. So we get this deal and we put in a lot of sweat equity. I mean, a lot of sweat equity. I was terrified to invest in this deal because it was the first one ever. I had to write a check for $25,000. In signing that check, I got a pit in my stomach because with any investment, there's always a risk. And I never invested in real estate before, so I was terrified, as you could probably imagine, but it worked out awesome, as you can tell, and it was one of my best deals that I put together yet. And now we're gonna get into point number 2, the numbers. All right, so before we get into the actual numbers, the value of the 1.4 million, we have to look at historical trends in real estate. Now, over the past 36 years, the average, even with the crash in 2008, we're looking at about a 6.4% over the past 36 to 40 years. So looking at our deal at $250,000 times at 6.4% over 15 years, again, how I'm getting this number is I'm doing 15-year period to get the 1.4 million. I'm taking the property value, and I'm also taking the rents over the 15 years. So looking at the market with 36 years to 40 years, 6.4%, if you're looking at the property at 250 purchase price, it's right around 630 in 15 years with the average market rate. Now I'm also being conservative because a lot of comparable properties in our area are going for right around 330,000 upwards to 400,000, and those are only for 2 to 3 units. Now remember, we have a 5-unit, so ours could probably be valued at 450, maybe 500, but to be conservative, I'm gonna stick with our original purchase price when I'm going with the 6.4% over 15 years, again, just to be conservative with it. So now you have to factor in the rents over 15 years. So the rents, I am not going to adjust for inflation, and I'm not gonna increase them. Again, I'm gonna play it very conservative. So what I'm gonna do, our total rent roll is right around $4,500 for the whole building. So if you take that times 12, which comes out to around $54,000, times 15, you get right around $810,000 over 15 years at full occupancy with that. Now, there's gonna be some buffers and people are gonna come and go, right? So maybe you're looking at a 90%. Hopefully, if you could have a 10% vacancy over 15 years would be great. But if you add those two up, you get right around $1.4 million. So as you can see, this $25,000 check turns into right around $1.4 million over the course of 15 years. That's one of the reasons that I absolutely love investing in real estate. All right, so let's look at some of the main takeaways, right? I'm just gonna kind of freestyle this and give you guys my main thoughts based off of the setup and the numbers. So number one, I would say, is your first deal that you do, I would say try to go a little bigger than you think you can. For example, I could have done a single family and rented that out, but we went for a 5-unit and I was terrified to do it, but it wasn't that much more work from a single family because you still would have to fix up a single family, you still would have to get tenants to rent out. Ours is the same, but we just have a few more units within it, but it yields a higher cash return per our dollar. Another takeaway is I would say land contracts are really good. If you could find somebody who you trust, who you could work with, those are the best deals. You minimize closing costs. You can negotiate pretty much whatever terms you want. Take, for example, our setup. When I told you in the beginning of the video, we got numbers that no bank would ever even touch, and that made it a good deal for us. So if you could find somebody who has a big portfolio, who wants to offload, who wants to help out a next up and coming young generation like yourself, find those people because they're gonna be mentors for you. The person that we bought ours from was a mentor towards us, and he's helped us along the way step by step, which those are the people you wanna surround yourself with, right? So land contracts are really good if you could find the right person. Also, my main takeaway is put your money into real estate. If you look at a 36-year average, 40 years, historically, even with 2008 happening, 6.4%. That's not bad. There are better returns, yes, you can get, but if you could buy a deal that's going to appreciate 6.4% over 40 years and give you cash flow returns, that's a very, very, very good return on your money now. So my thing is, I'm gonna be running these software development companies, the service-based companies, and I'm gonna be putting a lot of my money into real estate over the next 4 years to build my portfolio. All right guys, that concludes it. I hope you guys like the deal structure. I hope you like this one. It's a little different from doing a list or tips. Go ahead and comment below. Let me know what you think about this. You know, maybe I'm gonna do more of these kind of videos. I don't know. Really, my channel, I'm just gonna talk about what's going on in my life, running the businesses, investing, wherever I invest in, and I hope that you guys could take some value out of it, take how I set up this deal, and maybe go set up your own deal. Shoot me an email if you have any questions. I'm gonna put it down in the description, and I will see you guys in the next video.